Hey, good morning. Happy May. I am here to bring you some real estate update. We're going to be talking about things like interest rates. Where the heck are they headed? Inventory, is now still a good time to buy, sell, all of those good things. So hang tight. Watch this as much as you need. Feel free to share it with friends and family. But as you guys know, I am a total real estate nerd and happy to bring you some updates. So first things first, I think what everybody is talking about and waiting for is what the heck is going on with interest rates. Let me show you a little bit of what we are seeing. So this goes back a quarter. You can see here that this is February 7th. This is the mortgage bonds, and that's what essentially mortgage loans are. Investors buy mortgage-backed securities, and they trade them a lot like stocks. And what you can see here is that the price was around 106 back at the beginning of February, but those have been decreasing. The demand for these bonds have been decreasing, and that's why interest rates are going up. The largest purchaser of mortgage-backed securities, or said in another way, the largest investor, was the government. They, in the last decade, have just been printing money and buying as many bonds as possible to basically keep interest rates artificially low. But we knew that they weren't going to do that forever. In fact, if I go back to this, see where it says 2-year? If I go back over 2 years, take a look at this. I mean, look at this line. This is where interest rates, this goes all the way back to October 5th, 2020. So you see how this line is high? This is when we saw 30-year fixed rates in the high 2s, low 3s. And this time period in 2021, when you see a little bit of a dip, this is when we started to see interest rates in the high 3s. Still phenomenal rates, but it wasn't until November of 2021 that this line had started on the decline. And then in January of this year, we saw a very sharp decline in the demand, and that's because the government said, okay, inflation is through the roof. We are going to stop buying as many mortgage bonds that we have been in the prior years. And then they've come out and said that they are actually not only going to stop buying, but they are going to start selling their share of mortgage bonds. And so what economists are predicting, because of the news we're getting, is that that just means that interest rates are going to continue to increase. So here's what I've been telling clients. If we look at interest rates on an average, and I'm not just saying this because I'm in the business, I'm saying this because I want to actually bring you guys good news. If we look at historic rates in the 70s, the average rate was 8.8. In the 80s, it was 12.7. In the 90s, 8.2. You guys get my drift. The last decade, the average rate was 4.09%. This is when we were recovering from the housing crash. This is why the government was keeping interest rates artificially low. So the way that I correlate this is, it's like if you were going to buy something on sale, and you know how there's that clearance rack, and it's kind of like, hey, last call, this is your last chance to get this item on this discount because the sale is going to be over. And so a lot of people are asking me, Denise, do you think rates are going to go back down? And I mean, if you look at the last 5 decades, only one of the 5 decades when we were recovering from a crazy housing bubble have the interest rates been lower than 6.29%. So I think the government wants us to get back to that place. I wouldn't be putting my chips betting that rates are going to go down. I think that ship has sailed. But here's the thing. If you're in the market to buy, so here's what I'll say. If you are renting right now, then you should not let these interest rates rising or the clearance sale being over make you feel like you missed the boat. You didn't miss the boat. You just missed the sale. If you continue to rent, it's like paying 100% interest. You're not getting anything for that. So definitely don't do that. If you're considering selling and buying, then I would dig deep on why you're actually considering selling and buying. You might have a rate on your current home that's lower. Is now the time to sell? Do you need a bigger home? Do you need a smaller home? Are you relocating? Are you getting divorced? Do you want your kids to go to a different school? Don't feel like, oh my gosh, rates in the 5s means that, it's horrible. I'm going to give up a rate in the 3. It's not terrible. Historically, a rate in the 5s is not crazy high. So, okay, I'm going to get off the interest rate thing, but I just wanted to shed some perspective for you guys because I'm hearing people say I'm going to wait until rates come down, and that just makes me super nervous because I'm not so sure that they're going to go down. And so if not, it's costing you money. So then the next question is, well, what the heck is going on with inventory? Is this going to stay forever? And because interest rates are rising, Does that mean the price of home sales are going to go down? And you might be surprised with this answer. So let's take a look. This is a chart that shows us essentially active listings versus new listings. And the difference between the two means active listings means listings that are on the market each month versus new listings come on that month. And what we've seen since August is that the active listings have outpaced new listings. But take a look at this. Last month we got super close to it. In March, for the first time, new listings have surpassed the active listings. And basically what that's saying is what we've all heard, that the market is crazy hot. Essentially, as soon as a new listing goes on the market, it gets sold. So what that means for you if you're a buyer and or a seller is that you've got to be ready to make a decision quick. That means that your lender needs to make sure that they go over all the numbers, all the budgets, how much are you willing to spend, how much over sales price are you willing to go over. And now more than ever, your team that you hire as far as realtor and lender matters. You can't be working with an average team. You have to be working with a fearless team, a team that keeps you in the know, and a team that makes you competitive and aggressive, but not careless. So that's my spiel on that. It's going to continue to be a hot market. If you need extra cash to cover appraisal differences, things like that, don't forget your 401k that you can do a borrow against it, not a withdrawal, and that doesn't penalize you. And that's not a bad move because you're taking money from one asset and you're leveraging it for another asset. So don't let that stop you. If you need more funds or need that overage, consider a 401k, and then also know that we have a loan program that helps you buy with a non-contingent offer, which means you can buy first and then sell, and no, we don't charge you an arm and a leg. There's no additional lender fees or anything like that. It's just a way that we're helping our clients be competitive. So the next thing I want to show you guys is what's been going on from an inventory standpoint. Inventory has been scarce, but if we look at new construction sales, after the housing crash, new construction got hit really, really hard. And so what you can see from 1970 to 2005 is essentially the number of single family home units completed, and it was high. And what we've seen in the last 14 straight years is a 50-year average below new construction being complete, which is not helping our inventory problem. New construction has been low, so now not only is there fewer brand new homes available, but there's not as many people selling their existing home. And so that is contributing to our inventory problem. This next chart I want to show you is some good news. Real estate has always been a great investment to hedge against this crazy inflation. So take a look. The blue is the inflation rate. The green is home appreciation. So many people right now are a little scared about having their money in the stock market. What's going to happen? Well, what I can tell you is that if you currently own real estate, you're probably pretty happy. You've seen great appreciation gains. But is now the time to consider buying a second home or a rental home? And those are things that a lot of our consumers are talking about. Yes, interest rates are much higher on investment properties and second homes, but they do really great with hedging against inflation. Historically, they've always had great rate of returns. And don't be afraid to be a landlord. I'm a landlord. I became a landlord when I was 25. I was scared to death. You can do it. You just have to screen the tenant and, again, work with a real estate team that knows how to help you. So last but not least, the two most common questions we're getting is, am I buying at the top of the market and is now still a good time to buy? Well, a group of economists got together, and literally all these people do is study, trends, data. Like, that's their full-time job, is study the market. And here is what they're predicting. They're predicting homes to appreciate pretty steady. So if you bought a house today for $360, in 5 years, you can expect almost 100,000 rate of return. So what this tells me is the smartest people in the room are anticipating homes to continue to appreciate in value regardless of what's going on with the interest rates. This is another chart that forecasts. These are different entities: CoreLogic, Fannie Mae, the Mortgage Backed Association, Freddie Mac. These are just other entities that are forecasting what will home prices do in 2022. If we take the average, they also are predicting homes to appreciate by at least 6%, again, knowing that the feds want to increase the interest rates. And if we go back and look at the data, so this is when interest rates increased by more than 1% in prior years. What did that do to home prices and home sales? Well, what you can see here is that the home prices increased even when we saw interest rates rise. What we're seeing right now is inventory. So here, if you look at the inventory column, 5 months, 4.5, 4.8, our inventory right now is much less than this. And so you have to consider that home sales, we're not, even last year when interest rates were the way that they were and inventory was extremely low, we still had more home sales than we ever had. So that's kind of, it almost feels like an oxymoron. How could there be more home sales nationwide when inventory was so low? It's not that home sales are stopping, it's just more of a competitive market. So you have to be ready to go. You need to make sure you have thorough conversations with your real estate agent, with your lender, because when you go out and you look at a home, you have to be prepared to make a decision that hour, not even that day, it's that hour. And before you go look at homes, you need to make sure that you speak with us, that we get you fully underwriting approved. The days of you going out and looking at a home and then getting qualified are long gone. You have to provide all of your documents if you want to look competitive to that seller, because there are other buyers that know that this is what has to be done to be competitive. So you have to apply, upload your tax returns, pay stubs, bank statements. We're having our underwriting team review all that. It takes 2 to 3 days to get a full underwriting approved letter. So you can't do that on a Saturday. Underwriters don't work on a Saturday. Your HR department doesn't work on a Saturday. These are things that you have to get done ahead of time. So thank you so much for tuning in, of course, to my Mortgage Nerd News. If you guys have any questions, feel free to go to my website at themortgagenerd.com. Tune in for next month and make sure you follow me on all things social, Instagram, Facebook, YouTube. I look forward to talking to you next month. Take care.